Hey, I'm Dan Fitzpatrick. Hope you enjoyed your Thanksgiving holiday. And this is the free chart video for the weekend of November 29th and 30th. I want to look back at Veeva Systems. This is where the stock was looking. In fact, it might have even been here. I don't know. It doesn't matter really, does it? When I was last looking at this stock and I mentioned, look, this is an IPO stock. It had been cut in half and the stock had been consolidating. Okay, so this is how it looked at on this Friday or Thursday, whenever I looked at it last. I know it was one of these 2 days. And I mentioned, and I'll tell you why I'm going through this in a second, but I mentioned that this was a stock, if you're looking for a trading stock, this was not really your stock because this thing could trade, it could just kind of drift sideways for quite a while. And it's really not, I mean, you can see the general trend, but it's just not a trading stock. However, if you are patient and you just want a stock to hold, this is probably a good stock for you. So if we had instead traded this stock, first of all, like where's your entry here? Okay, so maybe here. You know, you're chipping around here in a stupid, 10% maybe trading range on this goofy stock, trending up above the 50-day moving average. But you're saying, okay, I'll buy the stock here, lows 27.41, blah, blah, blah. And then the stock moves up a little bit, happy, happy, joy, joy. What have you made? Like 15 cents. Not even that. And the stock's grinding around here, and then, oh, now you got taken out of your position. Okay, this is what happens when you are trading a stock that is not a tradable stock. This is not a stock that should be traded. It's a stock that if you are going to buy it, then buy it for a reason. And that is because you're comfortable holding it. If you're looking, and here's the other thing. I will, or just about any other market commentator will give you a trading idea, and you really like it. You go like, oh my gosh, this is great, or whatever, or maybe it sucks, but let's say you like it. You have to keep in mind what your time frame is. It has to be in sync with what the stock is doing. It's one thing for somebody to say, hey, buy the stock right now, it's moving. Okay, if that's your trade, which is fine, then if the stock's not moving, then there's really no reason for you to be in it, because the only reason you were in it was because it was, quote, supposed to be moving, and it's not. On the other hand, if you're buying a stock because you think it's a good long-term hold, it's sitting or flitting around here, kind of moving sideways, not doing a whole lot, but you like the uptrend, you like the 50-day moving average, you like the company, you like the business that it's in, all of this stuff. If you like all that, then you go ahead and buy the stock, and you don't sit here and watch it. You don't sit here, oh, it's up 64 cents. I wonder if I should sell. Oh my gosh, now it's down 86 cents. I definitely got to sell. Instead, you buy the stock, know that all of these little boxes here, the red and green ones, were made because that's the way the prices fluctuate. The stock's actually in a tight trading range here. You want to just buy the stock, basically forget about it until, oh golly gee, here the stock is, pops up, nice report, up above this last high, and then the very next day, which is on Friday, when like 9 people were trading, maybe you were one of them, the stock moves up even more, but on very, very light volume. Okay, so what do you do with the stock now? If you are long this stock, I would say this, if you're itching to take profits, and go ahead and take some profits, but let's go back to the initial trade. You're not buying the stock, unless this was part of your plan, you're not buying the stock saying like, okay, well, I'm going to wait till an earnings pop or something, and then I'm going to sell it right away. You're buying the stock, at least according to my thesis, because you like the stock, you like the company, you see that it was an IPO that got absolutely killed. Now the stock's climbing up. It's making its way back up. This is a stock that you want to hold. Maybe you sell some at 32.85. Then what are you going to do? Buy it when it falls back to 80 or to 31 or so, when it falls back to 30? Fine, but what if it doesn't? What if it keeps going? My point is, know what you're doing before you do it. And then after you do it, make sure you stick with doing what you're doing. So here, I think you can just hold this stock. Maybe it gets a little pullback next week, but maybe it doesn't. So you take a stock like this, you've got your plan, and then you just prosecute that plan. You execute that plan, and that is you look at this now and say, wow, this stock is moving in my favor. What's my next step? My next step is actually considering where I'm going to add more to this position. That, my friend, is for another video.